I was looking at the oil prices this morning, and they were down about close to 101 on the WTI, and they kind of firmed up a lot during the day. I think people, when they first get news, they panic and they sell off. There's been news about some types of slowdowns, oversupply, and different things. I'm going to go over that. Metals have gone up. Looks like the platinum is going up pretty good, and you know the ratio is not as bad as it was. This was the gold platinum ratio down here. This is 1.15 before. Now it's 1.10. So I was making a remark that platinum, and about a week ago, platinum and gold, the ratio was more skewed than it ever was. So it looks like that ratio is starting to recover. So, you know, if you were like a day trader, you know, I should have took my own advice, because I would be selling this platinum right now that it increased. And I probably should have put something into that, just thinking, but I didn't. I'm kind of waiting on the oil to pull back, and that's why I'm holding some reserves on. I should be a little more flexible myself, too, and I'm thinking about that right now. But as far as the crude oil coming back down below this, that is purely a guess. The mark of 100 is a pretty good resistance. Now, I do focus in on a lot on the oil, because oil and silver, they don't correlate very much on a normal economic times, but when oil goes in a very hard bull run, silver usually takes off, and there's a pretty damn good correlation. If you notice what happened back in earlier 2011, what happened when they had the crisis in Libya, or whatever you want to call it, the crisis, the revolution, or the NATO takeover of Gaddafi's oil, or whatever you want to call it. When oil was going up to 112 to the barrel on the WTI, silver was taking off and going up to $47. I expect the same type of scenario. So me personally, you know, I'm waiting around for grass to grow. You know, I saw this silver dropping down. I started picking up some PSLV here and there, it's lots. I started picking up, you know, I didn't buy it as low as this. It was around 31, but still pretty low. Then I started picking up some, you know, a few ounces of silver. Then I started buying 20 rolls, you know, little 20s at a time. But you know, about $29. So I'm still holding off, and I'm waiting on maybe a possible pullback in crude oil again. But I am kind of watching this stuff left and right, because I think there is a lot of money to be made in here. And one of the things to do is not listen to the experts, because the experts are never on YouTube. I noticed this, and that goes for all of them pretty much. But this, I came up with some interesting articles as far as, you know, and I'm going to put my thoughts on it. As far as, you know, this was oil price falls near 101 as supplies rise. Supplies of oil rise. Now, oil is close to 102. That's the WTI as we're speaking right now. And today is Wednesday, January 11th, 2012. The time is 12:44 p.m. The Energy Information Administration's weekly report on petroleum supplies showed gasoline demand fell by almost 5% last week from a year ago, while demand for all petroleum products dropped by 6.5%. So that caused some sell-offs, and that caused people to just get out of it for temporarily. Oil supplies rose by 5. At the same time, oil supplies rose by 5 million barrels last week, while gasoline supplies grew by 3.6 million barrels. And same thing with the distillate supplies increased by 4 million barrels. So I had this increase of supplies, and it's always news driven. But you know what can happen? Like I said, you know, if you could pick up the stories before the geopolitical events news wire hits, you know, you're in the money every time. But I think that there is a decent chance that oil's probably still going to keep falling back somewhat. Oil prices began falling early in the day after Germany said its economy contracted in the final 3 months, you know, quarter 4 of 2011. So that raises concerns about the rest of Europe, because Germany is the Eurozone's strongest member, and it's expected to prop up all the other people that aren't that strong. That's the way it goes. There's too much, and they're talking about there's too much gas out there. There's no evidence that people are shutting in gas production yet to compensate. Talking about the natural gas, and natural gas is actually taking a major hit in price. It says that the energy industry has been increasing natural gas production by about 5% per year, while U.S. consumption has been growing by just 1 to 2% a year. Now, I know a lot of people kind of fear this oil crisis because of the price of gasoline is, plus home heating oil and natural and gas for homes, home heating, and all this type of stuff. That all can rise because of a crisis in the Middle East. I don't know if it's going to do that or not, but I do want to point out something that it's amazing. I blame two sides on energy cost and everything that the average consumer has to pay. Not just the elite and their scamming in the oil companies, but also the average American. If you actually look back, I know this is about a vehicle and it's like a minor, it's a substantial portion of what people pay out of their money that they have available. And traveling around to work is actually one of the things that is, expensive. It could cost, a lot, especially if you're traveling at least 100 miles a day. It's a significant amount. So if price of gasoline goes up to $5-6 a gallon, that's a significant amount of money per week. But I want to point out, you just looked at those figures about natural gas production going up much faster than demand. And here, and this has been available for many years, this is a 2000 Chevrolet Cavalier economy car, 12 years ago. This had the CNG, compressed natural gas, and regular gas dual fuel. You would fill it up with compressed natural gas, and it would run on that with 6 gallons equivalent, and then it would go into the regular 14-gallon unleaded regular gas tank automatically. And the price on this vehicle was about $1,400 more than a standard Chevy Cavalier. And this was offered by General Motors in 2001, 2000, 2002, and 2003. I actually have a 2003, but I can't get this stuff anywhere. So, But what I'm saying is, I can't get this stuff because they don't, in the state of Florida, they basically don't have it. They have it in Oklahoma and Utah, but it could be made readily available inside of no time. These guys are playing a game, but I actually have to blame the American consumer partly because, if they bought the vehicles that use this stuff, there would be enough reason to do a little bit extra to make the fuel available everywhere. And actually, if you have this in your house, you can put the thing inside the garage that fills up the tank overnight. But this cost is actually, if you get it out of your home, once you have the setup, it's $1 a gallon. So some of these things about Lindsey Williams talking about $8 a gallon gasoline. There's a lot of ways around it, but I don't just blame the elite on this. They're screwing the average person. And the average person, they don't think when they got the opportunity to take action. They're very much superfluous people on average. That's the average American. So they will not think ahead. So that's a lot of times what happens with that. But I'm just saying the product's been there a long time, American made and all this type of stuff. But what do people do, right? So these cars, they put them out for about 4 years or so. People didn't buy them, and then they said the hell with it, right? So, that's another thing. talking also about oil production from Saudi. This I find interesting. This came from Reuters or something. But it talks that Saudi production is probably very near its capacity. And as they're getting down to the bottom of their capacity, they're starting to pump out more and more of the super heavy crude oil, which is usually what the market doesn't want. That is kind of like what happened with Libyan oil. They had the light sweet crude, and Saudi was able to make up for production, but they were not able to bring a product to the market that was the equivalent of the Libyan light sweet crude oil. So Saudi cannot make up for necessarily a shortfall from Iran, you know. And this whole thing that's going on where they're trying to take Iran and impose sanctions, quite obviously it's not going to work. You know, it's almost like a joke in a way, because Europe, you know, they're going to apply sanctions. You know, the United States is going to apply sanctions. Russia says they don't want sanctions, but I could tell you that they're not. That's not true, because they will profit by the price of oil going up. You know, they're just playing a game. They don't care about Iran. I know that. They'll sell them arms. But who's going to buy the oil from Iran? China. China's going to buy it. They're just going to get a better deal because Iran's limited on customers. So China's like, sanctions are great. You know? We're just going to force Iran to, since we're like their major customer, we're going to force them to drop the price. We don't care what it says on the Brent, you know? So the Western elite are stupid, you know, as I always said. You know, they surprised me how they had their elites for so long. But anyway, we're talking about Saudi Arabia can produce a steady rate, possibly beyond 10 million barrels a day, and that would offer immediate relief to the world oil markets. But it would take the kingdom's production to untested levels. And I look at it this way: they're going to get the crappier product out of the ground, and it's not necessarily going to be the product that's needed throughout the world. I mean, just because you could pump out 10 or 12, let's say it goes up to 12 million barrels a day, it may not, that 2 million barrels a day may not be the product that the world needs. It could be the type of oil that is only produced in certain refineries, and there's not enough refineries to refine the super heavy crude oil, you know. Now, talking about the trio has kept up a higher price, which means Saudi Arabia, Kuwait, and United Arabic Emirates, UAE, despite the return of Libyan crude to supply rising demand from Asia in an effort to bring oil prices below $100 a barrel. Now, there is an effort to keep the oil prices below $100 a barrel, which makes me think oil might pull back for a little bit, because it's like politically not a smart thing to have oil prices high in a year of an election. They might do it more on the end and blame Iran on the whole deal. That's the way I would look at it. They're going to blame Iran for everything. That's the way they're going to do it. But they're not going to want to have it just go up real high right now, so I'm kind of holding off on it. It says increasing deliveries demand for oil has left Kuwait and the United Arab Emirates producing nearly flat out. So they're already at the end. And it says, you know, if they try to stretch it anymore, it's not going to happen. It's not going to happen. But on the other end, there's a lot of other things going on. And it looks like, you know, even though there was more of a glut in the market of oil and gasoline, and that caused the prices to go down, a lot of traders are looking at what's going on with Iran. So they're kind of, you know, there's a lot of money kind of moving into oil right now anyway, so it's propping up the price. I kind of think it might drop down a little lower, so, you know, it's kind of hard to say. And I just haven't noticed that. I think the game's rigged, and they make more money off of volatility. So if you have a little patience, you know, if I miss out on oil, I'll probably grab something else, which would be a better deal. I'm always waiting for serious, hard pullbacks. That's what you got to do. Um, China gave no hint on Wednesday, which this last Wednesday of giving ground to U.S. demands to curb Iran's oil and revenues, rejecting Washington's sanctions on Tehran as, you know, Secretary Treasury Timmy Geithner lobbied for Beijing's support. I think Beijing is going to just, obviously, if you've got some common sense, China's going to be telling the U.S. whatever the hell they want to hear, and you'll be buying oil from Iran on the sly, and they'll be getting a great price because Iran don't have too many customers. So, but that's what's going to happen. Iran's still going to be able to sell their oil. That's why I think they're going to get attacked, because you know what the powers that be are going to do, right? Anyway, events in Nigeria. This is another place. Oil workers, that's another thing I could bring up, the price of oil. Threatened to shut down the output from Nigeria because they had a national strike. And the gasoline prices doubled in that country for that. That's one of the reasons they had a national strike. So there's a lot of turmoil going on in Nigeria. And I have to think back to like what Lindsey Williams said. This is probably all set up by the oil interest. They're going to cut off Nigeria. And they're going to sell to the United States the stuff domestically. And then get top dollar for it. So here we look at what's going on in the Bakken Reserve in North Dakota. And the output is skyrocketing. This chart goes from 2000 to 2012. It says the economic miracle state of North Dakota pumped another record amount of oil during the month of November 2011 at a daily rate of over 500,000 barrels a day, okay? Which was 43% over last year's output, and the first time the state's daily production exceeded 500,000 barrels. Oil production in North Dakota, has been more than doubled from 200, well, say a 250,000 barrels a day 2 years ago. North Dakota is now producing enough oil to completely displace the imports of crude oil from Colombia or Iraq. So, it's coming on. This is kind of going along with what Lindsey Williams said. His timing is off, as far as what he tells you what price he's going to do, but in ballpark area, he's pretty accurate. For the information he's getting from this oil elite person is probably very good overall. He's not God, he doesn't know everything, but overall it's pretty good. The number of wells producing oil in North Dakota increased to 6,060 different wells, which set a new record and exceeds 6,000 wells, first time ever, right? The amount of oil produced per well also reached a record high of 84 barrels a day in November, which is 50% higher than the 55 barrels a day 2 years ago. So there's more wells, and each well is producing a hell of a lot more. And this record-setting productivity levels has put North Dakota on a trajectory to surpass both California, which is over 500 million barrels a day, and Alaska, 555,000 barrels a day, this year to become the number 2 oil-producing state in the U.S. At the current pace of the record-setting monthly gains, North Dakota's oil production is currently on track to break 600,000 barrels per day by next March 2012, break the $700,000 level next August 2012, and exceed 800,000 barrels per day by the end of this year. At that point, North Dakota oil could be enough to displace either Venezuela's or Nigeria's imports. So, how does that jive in with Lindsey Williams said? Pretty close, right? I'd say. I kind of don't like the way he delivers stuff too much in his speech, but looking at what the facts are happening right now, I'd say it's pretty accurate. And they're cutting off oil from OPEC, and it's being produced here locally, and the prices seem to be slowly going up. North Dakota's oil production has now surpassed OPEC member Ecuador's daily production of 485,000 barrels. So, it looks like, this is going to come on. The U.S. oil is going to come on a great deal. Now, you know, if there's a real super crisis over in the Middle East, and I think that's going to happen, there's going to be an attack on Iran. I know there is. Just the way it is. I don't know how they're going to pull it off, but they're going to do it, and probably they're going to get most of the American people behind it. They're going to find a way. They're that good, despite what's being said. Now, the other flip side of it is, I do have to say that no matter what people say, you don't, if China, they say the United States this and that, but if these other countries had the power, they'd be at least 10 times worse. That's exactly how it is. That's exactly how it is. So, that's why I'm not that critical of the United States in a lot of ways, because these other countries would be a lot worse. And it is the regimes, but so what? It's, if you're a foreigner over there, you're going to be in worse shape than a local over there. I know people criticize Israel, hey, justifiable criticism, fine. But you know what? The same kind of criticism goes for pretty much every other country everywhere there is. So that's the way I look at it. But I think that this oil might pull back a little bit more, and it's going to shoot up probably more like in the springtime, and which is coming up very soon. And that's when you're going to start seeing that's going to make the silver go up a lot. There is a hell of a lot of a correlation between silver and oil when oil takes off in a very, very hard bull market. So I'm watching the oil very carefully, because that's going to tell me what's going to happen with the silver. But I think the silver is going to the better bet, because once silver takes off, it's still a metal that's related to gold, and as the financial crises occur throughout the world, there's going to become a point when the dollar is going to be downgraded. It may not be in 2012 because of the elections. But then again, you don't know. If they get disgusted with Obama, and the powers that be get disgusted with Obama, despite them saying they're not going to reevaluate the debt of the dollar in 2012, they will, just to get him out of there. They'll do it right away. So you got to think about what the elite are doing. So that's what I try to do. Follow what they do and grab what you can.